Well, good morning, and subcommittee will come to order. This is our first hearing for 2018 for the Ag Subcommittee, where we will be looking at the 2019 budget request for the Commodities Future Trading Commission. So while it's been an interesting and we've had a busy year so far with ongoing discussions and negotiations revolving around funding levels for the current fiscal year, our full committee chairman, Mr. Freeland-Heisen, has requested that we begin our work and start reviewing the President's budget request for 2019. And during this extremely busy time for my colleagues, I appreciate my colleagues for taking time to be here, and of course, and certainly our ranking member, Mr. Bishop. This is my 6th year to chair the Ag Subcommittee of Appropriations, and as I've done in past years, we're establishing goals for the subcommittee as we make our way through the FY19 appropriations process. The first goal is to bolster prosperity and economic well-being in rural America and the farm economy. The second goal, conduct fair and transparent oversight to agencies' activities and public resources. Third, promote economic growth through effective and efficient regulation and minimization of regulatory overreach. And last, and certainly not least, to protect the health and safety of people, plants, and animals. The Commodities Future Trading Commission continues to face new challenges as an ever-shifting swaps, futures, and option markets adapt to evolutions in technology and to the new actors which enter and operate within these markets. Meanwhile, we also often hear the phrase in my home state of Alabama that the agency must maintain its roots that grew out of the agriculture sector. We will discuss the President's fiscal year 2019 budget request of $281.5 million and other matters related to the Commission. The President's budget request is in line with the Commission's own request and includes the repeated proposal many prior administrations have made to fund a portion of the Commission with user fees, an issue that we think should be left up to the authorizing committee to debate that. The CFTC has been a popular topic of conversation over the years, and we will discuss some of the management and budget issues that have arisen during and prior to your term as chairman and what you have done to address them. Additionally, I am sure that some policy issues will arise, not the least of which will be the topic of Bitcoin, futures, and cryptocurrencies. Briefly, I'd like to recognize one of your accomplishments, Mr. Chairman, and that I have brought up over the years, and it's related to the topic of leasing costs and related issues. Last year, you informed the committee that you were able to actually save money on your Kansas City office lease over its lifetime. And the committee wants to commend you for this action, and it is one that I requested of your predecessors on numerous occasions, and we will revisit this matter to ensure that we actually see that it materializes into savings. With regard to new developments in the marketplace, I have spoken before on the need for the Commission to invest in technology, and that is why we've included a set-aside specifically for this purpose each fiscal year of my chairmanship. This is the best way for the Commission to leverage its resources in terms of enforcement and allowing for new innovation in the marketplace. Simply hiring more people won't stop the advanced degrees to which algorithmic trading and cryptocurrencies go to rip off customers inside the marketplace. Over the past 8 years, we have had a healthy debate on this subcommittee over the size of the swap markets. I was glad to see the Commission weighing in on this matter and look forward to exploring it further. I think most everyone on this subcommittee was glad to see a single market could equate to several times the size of the entire world's economy, and very curious of how that happens. But Chairman Giancarlo, we look forward to discussing these matters with you as we start our hearing today. There's a lot of work before this Congress and this administration and your agency in order that we keep moving in the right direction. Finding the right balance between overregulation and a safe and effective marketplace is essential, and it fits within the main focus of this subcommittee, which is to find the right size for your agency's budget. Again, thank you for being here, and we look forward to the discussion today and as we go through the members as they ask questions. Before I do recognize the ranking member, Mr. Bishop, for his opening statement, I would remind everyone that we will try our best to strictly adhere by the 5-minute rule. And when you're asked to speak, please push the talk button on your microphone, and then you will be ready to go. So, Mr. Bishop, thank you again for your presence and your work on the subcommittee, and the floor is yours.
Thank you very much, Mr. Chairman, and I appreciate your cordiality and our working together. I'd like to, again, take this opportunity to welcome Mr. Giancarlo, Chairman, to our subcommittee. We find ourselves again in the uncomfortable position of having a hearing on the agency's 2019 budget request when we haven't finalized the 2018 appropriation. Last year, the CFTC and OMB differed on the funding level, but this year it appears that the requests are on the same page, which makes our jobs a little easier. As I said last year, CFTC is extremely relevant to our farmers, our ranchers, and persons and other industries who use financial instruments to hedge their risk. I don't want to be the prophet of doom and gloom, but we need to understand the damage that our economy suffered in the Great Recession. We lost about 8.5 million jobs. The unemployment rate increased from 4.7 to 10.1% in October of 29. 10 million families lost their homes, and nearly 250,000 small businesses had to close their doors for good. Many on Wall Street and elsewhere tell us that those days will never come again, and we hope that that is true. We don't know that, and the historical record may suggest otherwise. Dodd-Frank has been the biggest defense that we've had against another catastrophe. I know, Chairman Giancarlo, that you're not one who wants to undo or unravel Dodd-Frank, and we thank you for that. You've reached across the aisle to me and to my colleagues, and I also thank you for that. I look forward to working with you, look forward to your testimony today, and I thank you for the opportunity to welcome the Chairman, Mr. Chairman, and at this time I will yield back my time.
Thank you, Mr. Bishop. Chairman Giancarlo, without objection, your entire written testimony will be included in the record. And I recognize you now for your statement, and we'll proceed with questions.
Thank you, Chairman Aderholt, and thank you, Ranking Member Bishop and members of the subcommittee. For over a century, U.S. businesses and farmers have relied on commodity futures and derivative markets to hedge their cost of production. These markets have allowed farmers and ranchers to control production risk and commodity prices so that ordinary Americans, can find plenty of food on grocery store shelves. These markets influence the price and availability of everything from heating fuel in American homes, the energy used in factories, the interest rates that borrowers pay on home mortgages, and the returns that workers earn on their retirement savings. Derivatives serve the need of society to help moderate price, supply, and other commercial risks to free up capital for economic growth, job creation, and overall prosperity. Our fiscal year 2019 budget reflects the true needs of a policy-setting and civil law enforcement agency to ensure that our derivative markets operate effectively. At a time when these markets are rapidly transforming with new digital technologies, this budget will provide the resources we need to oversee markets that are safe and competitive at home and abroad. In fiscal year 2019, we're requesting $281.5 million and 716 full-time equivalents. This is an increase of $31.5 million and 46 FTEs in current resources. It is the same level of funding that the Commission requested in fiscal year 2018. When I appeared before this subcommittee last year, I spoke about our approach to budgeting. The approach is based upon my experience in the private sector, where each dollar budgeted had to serve the core mission. It's not based on using a prior year's budget and adding a percentage. So working with our leadership team, we built this budget up from zero. Every dollar we seek properly serves the agency's mission to foster open, transparent, competitive, and financially sound markets, free from fraud and manipulation, while respecting the American taxpayer through careful management of our resources. And I am certain, as I sit here today, that $281.5 million is the right level of funding for the CFTC. Since becoming chairman, I have made efforts to normalize operations and maximize resources. That means a return to greater care and precision in rule drafting, more thorough econometric analysis, and a right-sized docket of new rules and regulations to be absorbed by the marketplace. As you know, modern financial technology is transforming our derivative markets. We must respond with a regulatory framework that stays ahead of the curve to harness those innovations. The CFTC seeks appropriate funding to set and enforce rules that foster innovation while promoting market integrity and confidence. This includes resources for our Lab CFTC initiative to prepare us to be a 21st century digital regulator. The budget request also seeks to boost the CFTC's analytical expertise and monitoring of systemic risk, especially with central counterparty clearinghouses. This includes the expansion of sophisticated econometric and quantitative analysis for risk modeling, stress testing, and other stability-related evaluations. As market regulators, we must take every step to thwart cyber attacks on the world's financial markets. That is why in fiscal year 2019, we will devote more resources to cybersecurity, especially our examination of critical market infrastructure providers. The day after the White House announced its intention to nominate me as chairman, I issued a warning to those who would manipulate America's derivative markets. I said, there will be no pause, no let-up, and no reduction in our duty to enforce the law and punish wrongdoing. The American people are counting on us. Full funding of our budget request will allow us to continue to send a clear signal to the marketplace that we will punish bad behavior and compensate its victims. In closing, Mr. Chairman, I'm reminded of a quote from Winston Churchill. We shall not fail or falter. We shall not weaken or tire. Give us the tools and we will finish the job. I'm grateful for your consideration of our budget request. With the right tools, we will do the job of overseeing American markets that are safe and competitive, markets that help grow our economy and increase our prosperity. Thank you.
Thank you, Mr. Chairman. Let me start out talking a little bit about Bitcoin and cryptocurrencies. The advent of new futures approved just last year for Bitcoin and other cryptocurrencies seem to have taken the headlines recently, and we read stories of people mortgaging their homes to invest in the market, and those that have thrown away their Bitcoin keys, wanting to go through the city dumps and try to recover them in some way. Millionaires were made and lost overnight. You briefly mentioned the steps you're taking to regulate the market in your written statement. Can you go a bit further into detail as to what role your agency plays regarding the regulation of this market and what other role agencies have?
Yes, Mr. Chairman, thank you for that. You know, the amount of press coverage on this whole issue of virtual currencies far outweigh the impact of the entire marketplace on either the U.S. or the global economy. Nevertheless, it is, as you say, very, very much in the news. The approach we're taking at the CFTC is really sixfold. And briefly, and then I'll come back to it, it's to assert our legal authority where appropriate, increase our staff competency in the entire matter, our understanding of these products, and then a very robust consumer education effort to make sure what we understand is translated to the marketplace. Very aggressive enforcement against fraud and manipulation in these markets. And then interagency cooperation, working very carefully with our fellow regulators. And let me just go back and talk about that a little bit. As you know, the CFTC's authority is to regulate derivative markets comprehensively. That means setting standards for operation of trading platforms in derivatives, all of their financial adequacy, system safeguards, cyber requirements, customer handling, the full gamut when it comes to derivative markets, so derivatives on any given asset, in this case, virtual currencies. When it comes to underlying spot markets, whether those are markets for commodities, whether they're markets for precious metals, we do not have regulatory authority. What we do have is fraud and manipulation authority, the ability to bring enforcement actions for fraud and manipulation in underlying markets. That's been the case, our history at the CFTC, and that is now how we approach virtual currencies. So in the case of the two launched Bitcoin futures at the CME and CBOE, we have comprehensive regulatory oversight. In the case of underlying cash markets, where they're not really cash markets because they're trading Bitcoin, what we'll call spot markets in Bitcoin, our authority is limited to enforcement for fraud and manipulation. We have been active on both of those levels. In case of fraud and manipulation, we brought 3 cases just in January alone. And just yesterday, a federal judge in New York, in response to a motion to dismiss by the defendants in that case, ruled in favor of the CFTC and confirmed our jurisdiction in these products as commodities. In the case of the Bitcoin futures exchanges, the 2 that I mentioned, our approach to this is comprehensive. So whereas spot Bitcoin markets are, you might say, dark markets, in the case of Bitcoin futures, they are lit markets. There is public transparency in our weekly COT report, but there is full regulatory transparency in terms of everybody who's transacting on those markets. And we know their positions. We know it's not a anonymous market as it is or a pseudo-anonymous market as it is in the underlying spot markets. It's a fully disclosed market. It's a margined market. It's a full KYC, know your customer, anti-money laundering marketplace. So they are comprehensively regulated and are highly margined. And I might mention as a final point, in the recent market disruption on the 5th and 6th of February, not a single margin breach in Bitcoin futures market. So that is our jurisdiction, and that has been our approach in those areas, Chairman.
Let me move quickly. Recently, you made some comments regarding the right sizing of the swap markets. And of course, it's refreshing to see someone else that raises those questions that this subcommittee has raised in the past about the notional size of swap markets. In fact, I believe you mentioned that these questions in your recent speech at a derivative conference in New York. Following the financial crisis of 2008, the swaps market became a topic of much debate in the public discourse. And the only number being thrown around was that of notional value. At the time, the number discussed was in excess of $600 trillion. Can you take just a minute and before I recognize Mr. Bishop and just explain the difference between notional value and the new metrics you're using and the number associated with each?
So thank you for that. In fact, it was this committee who wrote to the CFTC a few years ago and asked us if we could have a more precise measurement of what the true risk presented by these derivative markets are. And it was one of the first tasks that I assigned to our new chief economist when he joined the agency, to do some research and see if we could provide some light here. For years, the notional value of these derivative markets have been cited, often in requests for funding and other areas, in the hundreds of trillions of dollars. And yet, as we have long known in the marketplace, that many of those positions are netted against each other to a neutral position. So if you ask yourself, what is the true risk? Well, the analysis we did, and we call it entity netted notionals, is our new nomenclature. We put forward a scholarly paper, which I reported on that conference, applying this approach to 179 trillion of interest rate swaps exposure by American firms. Applying our approach nets that down to 15 trillion. And if you use the 15 trillion, the whole thing suddenly makes sense, because the measurement of the size of the U.S. Treasury market is 16 trillion. The size of the U.S. mortgage market is 15 trillion. The size of the U.S. corporate bond market is 12 trillion. suddenly the interest rate swaps market at 15 trillion makes sense in comparison to markets that we've normally sized in these ways. Suddenly, this $100 trillion measure that's been put on the swaps markets, I think, comes down to its true risk element and what it is vis-a-vis other markets. Now, this notion has been put forward in scholarly papers. We're looking for peer review. I think there's some good uses for this, but I don't think necessarily addresses every issue. So I don't want to say that we've come up with the last word on this, but we've certainly come up, I think, in some cases, the first word on this and getting to something that really is the true measurement of the risk profile of our global derivative markets.
As my time is far gone, Mr. Bishop.
Thank you very much, Mr. Chairman. Mr. Giancarlo, in the hearing last year, I asked for your views on using user fees to supplement or fund the CFTC, and you were commendably frank, as usual, and you said, quote, "I'm very concerned that imposing transaction costs on our markets would contribute to greater liquidity challenges than we now have, and so I do not support user fees." The 2019 budget request, which OMB and CFTC both support, calls for user fees to pay for the $31.5 million increase over the FY17 level of $250 million. It looks like the administration moved from its 2018 position of a freeze at $250 million in exchange for your endorsement of a user fee of $31.5 million. Do you now support user fees? And I'd note that you may get the short end of the deal because Congress has been resistant for decades to CFTC user fees. If that continues to be the case, is the administration's position that the budget should be $250 million?
Thank you, Ranking Member. If I may begin with just draw a distinction between user fees as a whole and then perhaps a subset of that, which would be transaction fees. I've long been opposed to transaction fees and remain opposed to transaction fees because they provide a tax on the use of these risk hedging markets. And my concern there is that when you think about the very folks that this committee is concerned with, farmers and ranchers, they face an array of risk hedging mechanisms. One, of course, is our commercial futures, ag futures markets. Another, in cases where they are interchangeable, is crop insurance. And we, in a sense, don't want to put a tax on one that's not on the other. We want them to make choices in their economic interest and not face a taxation in form of transaction fees.
That seems like it's just nomenclature. A user fee or a tax, I mean, you can, a rose is still a rose. It seems to me that it's just a matter of calling one a tax and one a user fee. It seems like they're one and the same because it goes to the people who actually use it.
Ranking Member, I'll note that every administration going back to Ronald Reagan has proposed user fees. And this administration is in favor as well, similar to their predecessor, and it is in our budget. At the end of the day, it is for our appropriators to decide not only it's for this committee to decide how much we're funded, it's for our appropriators to decide where that comes from and where that is. We will employ whatever tools our appropriators and our authorizers put before us.
I'm not going to try to put a wedge between you and the administration. Let me move on to diversity. At last year's hearing and in the meetings we've had, we discussed diversity at CFTC, and a couple of questions on the topic. Could you update us on what the agency has done on diversity, including recruiting? Could you tell us whether you were able to offer paid internships the past summer to the 11 students who accepted internships? Have you hired permanent staff from those internships? Can you describe the strategic workforce plan that includes increasing minorities and women in positions at CFTC?
Thank you for that. As we discussed last time we met, we're committed to a strong diversity program at the agency, not just in our employment practices, but also in our recruitment efforts. For 2 years now, we have had a diversity-based summer internship program. With our current funding, we have not been able to offer paid stipends. We would like to think with the budget proposal before the commission, before the committee, we would be able to offer modest, quite modest stipends.
Excuse me, you found funds for podcasts in a frozen budget, and you also spent $365,000 on your FinTech initiative between May and November. Those funds could have helped pay for the cost of those interns, couldn't it?
Well, money is fungible. We do have a core mission in consumer education. We have a core mission in trying to stay ahead of the curve in terms of the rapidly changing nature of these markets. So we believe those were well-spent funds, but as you know, we are committed to diversity-based recruitment and would like to be in a position, and with the budget proposal we have before you, we would be able to offer a modest stipend to interns.
Okay, that's without the user fees?
With the budget number of the $281.5 million that's before the committee, we would be able to offer.
But if you only get the 250,
well, if we only get
the user fees.
Yeah. Ranking member, if we only get the 250, we will be making a lot of hard choices at the agency, significantly hard choices.
Thank you. I think my time is up.
Thank you very much. And welcome back. Let me first just follow up on something that we've spoken about before, which are the swap deal or de minimis levels. And I think that you have you delayed the effective date of the reduction from $8 billion to $3 billion, but actually, I guess, in response to one of your questions, to your response to the chairman, is it because you're looking at this idea of entity-related notional value, and we've been basing this all on gross notional value? Is that why there's a delay in what the final ruling will be?
That's not the reason for the delay. The reason for the delay is that any change in that de minimis will require a commission vote. And it was such that I only received 2 additional commissioners last September because of the way the confirmation process went in the Senate. The amount of data to be analyzed to come to the right conclusion, and then the process of being able to put something out for notice and comment just meant we couldn't have gotten it done between September and December last year. So it was my decision as chairman to say we will get this done in 2018. The process now has begun of briefing the two commissioners on the data sets, which we now have through 2017, and it's good, it's robust data. And so I expect to get this done in a matter of months.
And does this entity netted notional value, will that enter into it? I mean, it kind of makes sense that that's the way you should gauge what the risk is of what you're regulating.
Yeah. So you know, this is an issue that many in the marketplace feel have gone on for too long. And I think if we were to use this new metrics, which, by the way, is new, and I do think it requires a degree of peer review and analysis, I think we would struggle to get this done this year. So I think the marketplace has a legitimate expectation that we get it done. I think entity netted notionals will take some time to work its way through the firmament, but there are now a number of academics who are looking at it and testing it, and I would hope that a year from now, in a number of other areas where we have to do risk assessment, it might become the basis for that.
Okay, and with regards to the swap deal or de minimis, is your feeling that it's a good idea to keep it near the $8 billion level?
Well, I'd like to see if we can get to a unanimous decision. Okay. I'd like to see if we can do that. And so I'd like to hear my 2 fellow commissioners. We will get it done one way or the other. If we have to get it done 2-1, we'll get it done. Okay. But I would love to get it done on a 3-0 vote.
Sure. Okay. The second issue is something that regards something that, you know, not from under your watch, but with regards to some of the leases that were issued in the Anti-Deficiency Act. I know there was a letter, I guess, sent from the GAO to the chairman of the committee this week about this question of whether or not the CFTC has entered into leases that, because of various provisions that don't limit government liability, that they would appear to be in violation of the Anti-Deficiency Act and may require statutory changes or other things to bring the commission into compliance. If you comment on that.
So we received that letter about 4 o'clock yesterday afternoon, and I had a brief word with our general counsel. I haven't had a chance to read the letter itself. I understand it does open concerns about open liabilities. As you know, these leases go back to the 1990s, in some cases the early 2000s. It does look like errors were made. I don't want to shirk responsibility. We will correct what needs to be correct. If there are deficiencies to be reported, we will report the deficiencies, and we will bring ourselves whole in this. There have been other issues raised over the last few years, and in each case we have done the right thing, reported the deficiencies, and recently received a clean audit opinion. So we will take the right steps. I think the bigger issue is that we're an agency that years ago leased too much space, and that's still something we're fighting with. And as the chairman noted, we have been able to successfully offload some of our space in the Kansas City office with making a significant reduction. We're looking to do the same thing in New York. We got a very active effort to do that. We don't have as much of a problem in Chicago and in Washington. We'll look to see what we can do. But I take this very seriously. As a former businessman, this is not a good use of taxpayer money to have empty space. So we will try to find a way to continue on the success we had in Kansas City and do more with it.
Well, thank you very much. I yield back, Mr. Chairman.
Recognize the gentleman from Wisconsin, Mr. Pocan.
Thank you, Mr. Chairman, and thank you for being here today. If I can follow up on something that the subcommittee chairman asked around derivatives. So in the budget, this is added responsibility. You went through an extensive amount of work that you are doing in this area and what areas you're not in this area. With the budget that you have, is that sufficient to continue to do all this work in this new area? And what's going to get put aside if not?
Thank you very much. I mean, it's a big job. The biggest challenge. So, great credit to my predecessors. They got the bulk of the Dodd-Frank swaps reforms done at the CFTC. We are not only the leading agency in the United States in terms of completing the workload, but we're the leader around the world. So we take great pride in that. But I often think about what's ahead. When Dodd-Frank was passed, it didn't address cyber. It didn't address algorithmic trading. A lot of the issues we're facing now are what's coming at us. And so a lot of what we're trying to do in this budget is prepare ourselves for this next phase of market evolution, what I call the digitization of markets. Markets are increasingly being driven by computer training, and increasingly computers that are using artificial and machine learning to learn from other activities in the market and then adjust their trading screens. And so we've got a lot to do to stay up and learn from that, which is why we started our Lab CFTC initiative. We've got great people at the agency, but some people that have been tracking markets for the last 30, 40 years, not necessarily, despite all that experience, are not necessarily on the cutting edge of where technology is going. And when it comes to technologists, we're competing with some of the biggest and most sophisticated companies in Silicon Valley and others to get that expertise. And so Lab CFTC gives us a way to learn and then train ourselves internally. So do I think the budget is the right number? I've worked this budget very, very hard. I think it's a responsible budget number. I think it gives us the resources we need. We may have to talk in the future, but I think this is the right budget for this time, for now, for the mission we have.
Thank you. And then you brought me right to the second question I had, which is you and I said this last year too. You've established a very good relationship with your employees. They speak very highly of the relationship they've built with you. The question is, a lot of the folks are being rated, so to speak, by other financial agencies, by private firms. Do you feel that you've been able to make some progress? The question we asked was, to keep those people in this very competitive area. How is that working from a year ago when I asked the question, and do you need additional resources in this area?
So with the flat funding we've had for 3 or 4 years, it almost imposes something of kind of a hiring freeze. You can't backfill, and the problem with that is you can't control attrition. You can't say, well, we have too many people in this unit, maybe that unit will suffer more attrition than another. You have no control of who goes. And often, sometimes it's the very best people who are recruited away by either competing government agencies or in the private sector. Some of our best technologists we've lost recently to private sector concerns because of the experience they've gotten at the CFTC. So that's a real challenge. Again, I spent 30 years in the private sector and 14 in a public company working with personnel. And so it's a big part of my management style to meet frequently. I do frequent town halls, have one coming up in just 2 weeks, with the agency-wide staff. I talk a lot about goals. I try to be very transparent with personnel at the agency as to what our mission is, and we spend a lot of time talking on mission. And I'll just leave you with one thing is the message I give the staff is the message that the coach of the New England Patriots gives to them, and that is every person to their job. I say if every person does their job to the level of excellence, the whole agency will take on an approach of excellence. And notwithstanding their loss in the Super Bowl, they still bring excellence to the game, and that's what we try to do as well.
And how about just specifically onto the incentive question for some of these folks? I mean, because if they are being rated for more money, are you able, with the budget you have, to be able to do what you need to keep the staff?
So we just reached, and I'm very proud of this, we just reached a 3-year pay package with our union, first time ever. In fact, when I arrived at the agency, we were in a dispute with the union. We've gone from dispute to a very successful 3-year arrangement, and it has in it a up to 3% performance-based, merit-based reward for employee performance. So we are trying to move more into a reward performance basis at the agency, and I must say the union brought the same goodwill back to the bargaining table that we brought, and I think that's a recipe for good progress in the future.
Great. Thank you very much. I yield back.
Mr. Yoder.
Thank you, Mr. Chairman. Chairman, good to have you here today. And I want to associate my comments a little bit with the comments of the ranking member regarding user fees. And you and I have had a conversation about this as well. And the concern being that ultimately passes down to farmers and producers in our states that are already struggling under low commodity prices. And as you correctly stated, would tax efforts from them to protect their risk and to hedge, and might push them into taxpayer-funded options. And so I appreciate your comments on that, and I think this committee and this Congress has been pretty clear over the years that it doesn't support those user fees, and of course, the good things you're trying to do in your budget will try hard to find general fund dollars to spend as opposed to taxing the markets and ultimately our producers. I want to talk to you a little bit about the plans that the Fed has to replace SEM with SACR. And as we know, these are methodologies for calculating how much capital a bank has to hold to comply with the SLR rule, or supplemental leverage ratio, in relation to a cleared option. SEM is a very old, risk-insensitive method, while SACR is accepted generally to better gauge risk. It's my understanding that the Fed intends to move in this direction, but is likely to do via rulemaking, which interested parties suggest could take up to 3 years. Meanwhile, markets are operating in an artificially constrained state because they're under these old rules, and some say this was evident in the February market behavior. So I guess my question for you is, given the increased volatility we've seen in markets this year, I'm interested in your view of whether this may be an indication that swifter action is needed than the potential 2 to 3 year rulemaking process.
Thank you for that, and I think that's a very perceptive insight. In fact, we do have some anecdotal information that's coming to the agency that during the 5th and 6th of February, during that market swoon, there may have been, we may have seen the impact of the current form of the supplementary leverage ratio impacting the ability of larger market makers to take on positions, and therefore the market movement may have been exacerbated because of the current form of the supplementary leverage ratio. And let me just talk about that for a meeting. I find myself in kind of an odd position as a Republican who supported the provisions in Title VII that says we want to move more bilateral swaps into central clearing, only to find that some of my fellow regulators in the system have a supplementary leverage ratio approach that actually deters moving more products into clearing. These are at issue. I think that we made a policy choice in Title VII that we want to see more central clearing of derivatives, and yet in its current form, the supplementary leverage ratio, which is not mandated specifically in Title VII, has this opposite, or this deterring impact that causes it not to move into clearing. So we've got some work to do here. I've been very candid in my views with folks at the Fed, including the new Chairman Powell, and look forward to actually sitting down with Randy Quarles soon to talk a little bit about this as well. So I think we can get it right, but we don't have it right currently.
Well, and I think the Fed is heading in that direction. I think the concern is that it could take a while for the wheels of the Fed to turn, and a rulemaking process could take 2 to 3 years. Are you concerned about the length of time it could take to fix this, because we continue to have this challenge and this arcane requirement that affects, the options markets at the same time?
I must say I've spent 30 years in the private sector. The length of time
Yeah.
things take here in Washington is just sometimes astounding.
So you get it, and I appreciate your work in that regard. I also want to ask you a little bit about this CFTC's decision last year to approve a variable storage rate on Kansas City hard red winter wheat. As you know, from Kansas, we're the biggest wheat producing state in the country, and America's the biggest wheat producing country in the world, and so wheat's a critical part of our economy. And this was a particularly important decision given the significant disparity between the wheat farmers' local cash price and futures price. Could you provide the committee with an update about the current market situation, your views about how VSR could fully work once implemented, and describe the CFTC's role in implementing VSR?
So thank you for that. I think sometimes people look at us as a regulator and think that as rules evolve or change, we then walk away and move on to something else and don't review the evolution. But that's not the case. As our exchanges bring forward rule changes, we're actively engaged both in advance but then thereafter to monitor how those rule changes are working in the marketplace. And I think it's a critically important part of what we do. We don't want markets that are static. We want markets that evolve as market participation, but we also need to stay very close to it to see how those evolutions impact. And so in the case of the variable storage rate, we have a team that watches this very carefully and are watching it now to see if the evolution is meeting the needs of our core users, but also those who also provide liquidity to them as well.
Great. Thank you, Mr. Chairman. Thank you, Mr. Chairman.
Ms. Pingree.
Thank you very much, Mr. Chair. Thank you for being in front of us today and for all the topics we've already considered. I've got just a couple of questions for you, and you've been very articulate in discussing why the budget number that you've gotten comfortable with is important, and I think people have asked you a lot of questions, but I just want to give you one more chance. And I was thinking particularly in some of the things you had mentioned around cybersecurity, surveillance, enforcement. So if you don't get the number you want, how will it impact some of those really critical things?
It's very challenging. So let me just give you a couple of figures. So I'm going to give you 4 federal agencies and tell you what their cyber, or give you 3, and then I'll tell you what the CFTC proposals and what their cyber spending is. So the SEC, their budget for cyber is $60 million. The FDIC, it's about $110 million. And the Treasury, it's about $500 million. Our budget request is $7 million. Now, I think it's still the right number. So in the most recent FISMA cybersecurity risk assessment, the CFTC had the highest ranking of any of those agencies, and yet the smallest budget. So I'm proud of what we're doing, and I think this is where I bring some of my business management experience. I can assure this committee every dollar we're asking for, we will spend, and it's my intention to be best of breed and best cost-effective dollar spender. So I think we are the best at our cybersecurity, and yet we have the lowest budget, and I'm very proud of that. But we need that $7 million. We don't need 6.5. We need the 7. And the others, I say that goes through our budget as a whole. In every case, we've tried to make it as tight as possible, but knowing that every dollar is extremely well devoted.
Well, thank you for being so articulate and exacting about that. I think it does help when sometimes these numbers become very arbitrary and the cuts just become a slash. One other thing, your testimony talks a little bit about the communication you've had with foreign counterparts through bilateral discussions in the IOSC. Can you just tell me a little more about your engagement with European counterparts on cooperating on some of these new challenges in a global and maybe the Asian side as well?
Yeah, thank you. So I take the international engagement of the agency very, very seriously. Within weeks of becoming acting chairman, I flew to Brussels and met with our counterparts there. I've met with them in London and in Asia as well. I was just in Asia in the autumn. These global relationships are very important. And I believe in the initiative that was begun in 2009 in Pittsburgh of the G20 to reform the global derivative markets and support the CFTC's efforts. And as I mentioned, we've been a leader in that area. And as other countries come online, working out harmonization between us has been a very big part of the process. One of the big accomplishments of my predecessor, Chairman Massad, was in 2016 to negotiate an equivalence determination for clearinghouse supervision between the United States and Europe. And since that, in 2017, under my leadership, we were able to negotiate 2 more equivalence determinations on margin on uncleared swaps, as well as on trading platform. So again, the CFTC has been a leader. I am concerned, however, that in the wake of Brexit, the European Parliament is taking up some new legislation, and it's unclear in that legislation what the impact would be on the 2016 agreement that we negotiated less than 2 years ago. I think it was in May, less than 2 years ago with Europe. So I was in front of the European Parliament 2 weeks ago. I had the pleasure of testifying in front of them as I am testifying before you today, and I made very clear that having negotiated a deal, we expect that deal to stand, and we expect the parties to that deal to stand behind that deal.
Other big challenges in sort of the harmonizing?
Again, you know, there's benefits, but there's also challenges in being a leader. And because we were out in front as we see other nations come online, we need to look at those regulations very carefully and find out where the gaps are between what we're doing, where the overlap is. So I would say that there are issues all around, but nothing I would bring to this committee's attention at this point other than say it is a constant challenge. We've got a very good group in our International Affairs group at the CFTC. They're on the road constantly. They're reading briefing papers, constantly coming into my office, keeping us abreast of the issues. But it is a big challenge.
Well, thank you for that. I yield back, Mr. Chair.
Thank you, Congressman.
Mr. Valadao.
Well, thank you, Mr. Chairman, for being here, and I appreciate you answering a few of the questions I was concerned with as well from my fellow members up here. But I did want to touch a little bit more on one issue. So, Mr. Chairman, in 2017, a report by the CFTC's Inspector General criticized the CFTC's outdated methods in collecting data on derivatives markets activity called some of the data essentially unusable. Other reports have raised concerns that the CFTC's technology is outdated and unable to keep pace with that of the derivatives markets participants overseas. While I understand the CFTC has been taking a preliminary look at new ledger technology such as blockchain that it hopes will help better analyze data, specifically, could you please tell us the steps you have taken in the last 6 months towards modernizing the CFTC's IT system? And how would you currently rate today's system as to whether you are behind, ahead of, or just keeping pace with IT systems among market participants that you regulate?
Thank you. That's a critically important question. You know, one of the core mandates of Title VII and to come out of the financial crisis was greater regulatory transparency into market positions of large market participants. And a big initiative was to collect data, create swap data repositories, and make that data available both to us as regulators and to the marketplace. I support that core reform and that initiative. Since that time, however, and I read very carefully that Inspector General's report and took a lot away from it. Again, not to shirk responsibility, the time period covered was that of the prior commission. But what I read in that report and what I've taken away from that report, it was really a failure of project management. And again, from my experience in the private sector, project management is a difference between success and failure in any large project, and this is an enormous project. So I've changed both the leadership of the project, their goals, and their deliverables. And as a result, in the second half of 2017, the agency issued, under my direction, a roadmap to this data project. We actually said, and my dad used to say to me, if you don't know where you're going, you'll never get there. We said where we're going, and we said when we want to get there. And we laid it out in a series of deliverables over the course of 2018, and by the end of 2019, we intend to complete this project of data transparency into our swaps marketplace. Now, that may sound like a long time, but unfortunately, progress hadn't been made earlier, and so we need to take where we are today and go forward. And I thank the OIG for their work, because I think it helped our thinking on this. I think we now have the right people in place, we have the right goals in place, we have the right deliverables. We are actively engaged in this, not just domestically, but internationally as well. We are chairing some of the key groups at CPMI IOSCO, which is the International Association of Securities Regulators, and elsewhere, in putting together the global standards that need to be used, because these are not domestic markets anymore, they're global markets. And it's only, we only do us so good if we got the correct data for our domestic trades, but don't have it on a global basis. So we need to reach the global standard. And the last thing I would say is that built into our budget is allocation for upgrading a number of key systems, the hardware that's necessary to deliver on this project as well. So full funding for our budget also means that we will meet the deliverables of that roadmap. If we're not able to get there, then we will have to see how we triage other resources to be able to stay on target for that timetable.
So on the second part of that question, which is how do you rate the current system? Give us some examples. Tell me a little bit about how the current system is working in comparison to what's going on around the world, and even some of the participants in the marketplace that you regulate.
Well, first of all, I don't want to get too critical, because we still do absorb 60 million records a day. I mean, we take in an enormous amount of data, equal to perhaps any other financial regulator and probably greater than most around the world. So we successfully analyze. We are a data analysis agency. We do a lot with what we have. However, the next frontier is to do the kind of thing that eBay and Google and others do with enormous amounts of data, and they automate the data analysis. Our data analysis is still partially manual, partially automated. Where we want to go in the future would be to bring a much higher level of automation. That may be a 2020, 2021 project. We still have to complete what we've started, but that's on the horizon for not just the CFTC, but financial regulators everywhere, to be able to analyze the data the way big Silicon Valley companies analyze commercial shopping data and all that. They do amazing things with data analysis. We're not there yet, but that's got to be the path forward.
Thank you. Thank you, Chairman. My time has expired.
Mr. Laurel.
Thank you very much, Mr. Chairman. Nice to see you, Mr. Chairman. Thank you very much. I think we all know how catastrophic the impact of years and years of deregulation was. It culminated in the 2008 crash. Dodd-Frank, which I was proud to support, has put us on the path to reducing that threat of the too-big-to-fail firms. It protects consumers, investors, so that they're not swindled, they're not ripped off, and focusing on supporting an economy that works for all Americans. And I would just say, took the most dangerous and unreasonable risks in the financial system. They've been greatly reduced, and a financial crash, and I think you probably would agree, is much less likely due to Dodd-Frank rules and with everything that was encompassed here. And like most laws, it's not perfect, but an imperfect law is better than no law at all. I think you would agree. I'm frankly troubled by the efforts that are supported by both Democrats and Republicans that would scale back some of the regulations that have been put in place, and that is to unravel Dodd-Frank in many respects. I'm equally concerned with what looks like the Commission's desire to work on new, bright, shiny object cryptocurrency when there's so much work to be done in the financial markets that impact so many more Americans. For example, we know that just 1,000 individuals own 40% of all Bitcoin. Bitcoin's own website published a survey of 5,761 adults on January 24th of this year, and it showed 60% of Americans had heard of Bitcoin, and only 5% owned any Bitcoin. In past years, CFTC has successfully managed to protect consumers, imposing billions of dollars of sanctions on bad actors. So why should the committee support the diversion of resources to regulate a new financial world when there is so much that still needs to be done, and looking at what is going on with unraveling the regulations in Dodd-Frank? Why shouldn't we continue to stay the course focus our energies on what has been successful. The regulations were put into place to prevent another crisis. Why are we going to, how are we going to continue to maintain the protection of the majority of Americans? And if we're going to divert our time, attention, and resources to some of these other areas.
Thanks for the question.
Sure.
So it was my predecessor who looked at our law, the Commodities Exchange Act, and reached the conclusion that cryptocurrencies, at least in the form of Bitcoin, meets the definition of commodities under our act, and began the process of doing what we're legally obligated to do, which is enforcing our rules against fraud and manipulation. So the process of enforcing laws against fraud and manipulation in cryptocurrencies began by Chairman Massett, and I've continued that process. We don't have statutory authority to ban Bitcoin. It's not within our authority to do that. Would require an act of Congress.
But and that's not a point of banning it, but we are, when I say 5% own Bitcoin, this is a very small piece of the, the overall picture here is, again, you have a limited budget. And believe me, I've chaired this subcommittee and increased funding for the CFTC, but limited. And why are we then moving our limited resources to an area where I understand you want to do some looking, but that has a very just small piece of the whole picture.
I'd be concerned, though, because, as you say, there are scammers out there that are taking advantage of people's interest in these cryptocurrencies, especially young people. And for us to say, you know what, we can't spend the resources to bring enforcement actions against fraud and manipulation would, in a sense, leave those people vulnerable. So I think we have a duty, if it fits within the definition of our statute, have a duty to take our enforcement action as we do.
I will just finish with this because my time is almost up. I understand that, and I think we ought to, look at the new areas and rooting out fraud and all those pieces. But as I started my commentary, I'm very, very troubled by how, in fact, and as I say, this is both Democrats and Republicans, are unraveling Dodd-Frank. It was put into place for prevention purposes, given the enormity of the crash. And quite frankly, I sat in the room with Secretary Paulson and Ben Bernanke when they told our leadership that this was a Friday and that by Monday we were going off a financial cliff if we didn't do something. So, I don't come out of your world or their world, but it was troubling. So we put these prevention in place. This is like saying to me in some regards, where I think you ought to pay attention, and you are, don't misunderstand me, you are, and you need to pay focused attention on what is going to happen. After we put protections in place after Hurricane Katrina, okay? Now that since we haven't had a hurricane of that scale, now we're going to dismantle the protections. That is essentially what is being done in Dodd-Frank. And it's my view that that's something that you need to pay very, very close attention to, and what the risks are going to be to the majority of Americans if some of these things continue to be unraveled and there is no protection as we tried to put in place. Thank you. Thank you, Mr. Chairman.
Mr. Young.
Thank you, Mr. Chairman. Welcome. Nice to see you. I want to talk about RINs.
Yep.
You know what those are. Renewable identification numbers. So the point of the RFS, as you know, is to blend more biofuels. When it was adopted, the refiners themselves asked Congress to include an alternative compliance method comprised of tradable credits so refiners would have more flexibility. So RINs are free. You get one when you blend a gallon of biofuel. If you choose not to blend, which some refiners do, then you have to buy a RIN. I want to talk about RIN transparency. In March of 2016, the CFTC did an MOU with the EPA related to the RIN markets. So the purpose of the MOU was in part, to permit sharing of business information on the RIN market so that CFTC could advise EPA on, quote, techniques that could be employed to minimize fraud, market abuses, or other violations, and to conduct appropriate oversight in RIN and renewable fuel markets. What kind of advice have you given EPA? What have you learned?
Thank you for the question. So we entered into that MOU, and the project that commenced following it was that the EPA provided the CFTC with trading data in the cash markets. Let me actually just draw up a jurisdictional picture for you. The EPA has jurisdiction over the physical RINs market, as you know. CFTC has jurisdiction over the RINs derivative markets, RINs futures. And just by way of background, there is virtually no trading in RINs futures. I mean, you know, less than a dozen. So arising from the MOU, my predecessor, Tim Bassett, reached an agreement with the EPA that they would provide us with their trading data in that underlying cash market, and we would review it using our tools to look for fraud and manipulation if we saw it in that market. Unfortunately, as anybody that's worked in data know, that the ability to draw conclusions depends on the quality of the data. We were able to go back to the EPA and say, we do not see signs of fraud and manipulation in this market. But then again, the data is not terribly good. And we gave them some advice, one regulator to another, as to perhaps steps they could take to improve the quality of the data.
So is the data not good because it's just not transparent? You're not getting the information? Tell me why the data is not good.
Again, it's their process of collecting the data. It's not our process, but
how would you change that process to get better data?
I'd have to go back to our folks that did that analysis and met with the EPA, but they, my understanding is they gave them advice both into the very nature of how it's collected, what is collected, what are the time series of what's collected, the thoroughness, and it had issues from soup to nuts. Now, what I will share with you, Congressman, is recently I had a chance to sit down with Ag Secretary Perdue, and he brought up this very issue and his concern that we try to find a path forward. And I've asked our chief economist to sit down with his chief economist and maybe folks from EPA as well to pick up this conversation and to see what can be done going forward. So there is a dialogue that's begun. I don't know what their meeting schedule is to see what can be done. When I report to you that process, it was a process that was done under my predecessor. So the information I'm giving you is a little bit secondhand, but it is my understanding as I've described it to you.
Well, I'd love to be. I think Congress should be kept abreast of this. I would love to work with you, you know, working with the stakeholders as well within the industry, and making sure that we all have a complete understanding of what is happening, why it's happening, the process, and if there's a need for better transparency and accountability along the way. And I just have a few seconds left, so I'm just going to yield back, and I'll wait for the next round, Mr. Chairman. Thank you.
Congressman, I'd be happy to come in and visit with you once that meeting's taking place amongst the economists and keep you abreast of the discussions.
I look forward to that. Thank you.
Thank you, Mr. Young. Mr. Chairman, I'm sure you're aware of our FY 2018 bill carries a provision that would amend the Commodities Exchange Act to require a lower level of margin or capital, known as variation margin, in transactions of a swap between one party and its affiliate with whom it has some type of shared ownership interest. This is in contrast to the current requirement for a higher amount of capital known as initial margin. Additionally, the bill carries a provision that will require a more stringent analysis of the cost benefits to CFTC actions. The question would be, could you explain why the initial margin requirements were put in place by prudential regulators, but were not initially required by your agency, which specializes in regulating swaps and has the knowledge and expertise on these matters?
Yeah. I'll add to that not only did we not follow that approach, but the rest of the world didn't follow that approach of our prudentials. So our prudentials on this are a bit of an outlier in global markets. You know, as an agency that oversees markets that are global, we understand the implications of a margin requirement that really doesn't address this. The systemic risk is the counterparty to counterparty, not internally within an organization. And our reason we didn't follow the Prudential's approach is we believe that actually makes it more difficult for American users of these products, end users, whether they be manufacturers or other large business, it makes it disadvantageous for them to use an American financial service firm to transact in global markets, because the American firms are the one paying that initial internal margin, and it gives an advantage to foreign financial service firms. And what we find unhelpful about this approach is essentially it puts our firms in a competitive disadvantage in operating in global markets, and it causes American end users to choose foreign financial service firms over American financial service firms in engaging in foreign markets. So that's the reason we took the approach we did. We think it's anti-competitive for American business, and we don't think it really enhances systemic stability, because that's enhanced simply by the margin being imposed when one distinct firm trades with another distinct firm.
What was the position of your predecessors on this issue, and where do you see your policies differ on the issue?
So my position on this is completely consistent with Chairman Massad's position. We came to a similar conclusion when we were together at the commission. He voiced it on behalf of the commission as chairman. I know he voiced that position with the Prudentials at the time, and I continue to believe Chairman Massad got that right, and I think we've got it right at the commission.
In regard to the cost-benefit analysis requirement, what is your opinion of placing the mandate on the agency?
So I'm a big believer in cost-benefit, and not to be used in the event of a lawsuit. It's just to get the rule right in the first place. I think that if you do proper economic analysis, you come up with a better rule, and a rule that serves the passage of time. And so I believe in it. Now, we don't have as robust a standard at cost-benefit analysis at the CFTC as does, say, a comparable agency like the SEC. So there's been a number of conversations over the years about enhancing the CFTC standard. And I think that there's a lot of value in some of those considerations. But at the end of the day, I think good cost-benefit analysis is simply a matter of good government.
The House passed both of these provisions in both the CFTC authorization and the Ag Appropriations bill. Are you aware of opposition either on the Hill or in the administration that would prevent the enactment of these provisions into the final?
I'm not.
Okay. You mentioned this briefly, we referred to it, but let me just go a little deeper into labor and union negotiations. During our hearing last year, we discussed the situation around your labor union negotiations, and we included in our bill a provision that will allow you to adjust the pay and benefits to your employees should furloughs or reductions in force occur as a result of these negotiations. This was done because there were reports that CFTC would have to lay off employees if it did not receive its budget request, and a federal service impasse panel imposed excessive financial burdens on your agency. I also stated at the time that it would be difficult to give your agency more funding unless the situation was resolved, because the money would not be used to invest in high-priority resources for overseeing the markets the Commission continues to claim that, of course, it needs. Can you give us a little bit of an update on the labor negotiations for the current fiscal year and even future years?
Yeah. The labor negotiations proceed in I think, a satisfactory pace. The very first phone call I made upon being sworn in as acting chairman was to the head of the union, and to say that I look forward to good relationships with them. At that time, we were in a bad place vis-a-vis us in the union. We were in dispute mediation. We've resolved those issues, and as I mentioned earlier, we achieved a 3-year pay package with the union. We have other items to resolve before we can get to a similar 3-year full collective bargaining agreement, but we are making good progress on that. And I believe if the goodwill continues on both sides, it certainly will continue on management side. With the continued goodwill, I think, of an honesty and that we've brought to the table and that they have as well, I think we can continue to make progress.
Okay. Thanks. My time's up, Mr. Bishop.
Thank you very much. Let me return to another issue. The Futures Industry Association wrote you last December to express concern about the process by which several CFTC-regulated exchanges and clearinghouses self-certified certain futures and options contracts on cryptocurrencies. The letter said, quote, "Under law, exchanges may self-certify a product for trading by the close of business one day and then list the product for trading the next day. This process does not require CFTC approval or input and allows little or no time for public review. While suited for standardized products, this process does not distinguish for a product's risk profile or unique nature. We believe that this expedited self-certification process with these novel products does not align with the potential risks that underlie their trading and should be reviewed. I do understand that your staff had extensive discussions with these entities prior to the announcement, but frankly, it sounds like the agency had to ask for changes, not insist on them. Given the volatile nature of the Bitcoin market, this is a bit troubling, no pun intended. Would you discuss this?
Yeah. So the self-certification process goes back almost 2 decades at the agency. It's been the long-standing, and I think that until recently it hasn't been controversial. Over 12,000 products have been self-certified over that period of time, to my knowledge, it hasn't been the subject of a great deal of controversy. Under those provisions, the exchanges did approach the CFTC over the course of the second half of last year, and we did require them to make a number of enhancements that we refer to as our heightened review process for cryptocurrencies. You're absolutely right. It was on a voluntary basis. I've asked the staff to go back and consider whether that can be put into staff guidance. And even though the process doesn't provide for public hearings, Commissioner Benham held, as part of our Market Risk Advisory Committee, held, I think, a very well-attended, very well considered, very well thought-through public hearing on the self-certification process. A number of ideas came out of that. And I am open to discussing with my fellow commissioners whether there should be some adjustments to the self-certification process, and we'll hear ideas amongst the commissioners. Having said that, I do want to make it clear that the self-certification process is a long-standing feature of the agency. I think we were able to utilize it to get some quite unprecedented concessions from the 2 Bitcoin futures providers, and will require that on a going forward basis for any future self-certifications that we might see for Bitcoin or otherwise.
Seems like the time frame is so short in that particular instance that it raised concerns. So I hope that you will look at that and perhaps get back to us. On cybersecurity, obviously it's a constant concern for both federal agencies and the industry. And I believe you said last month that you don't have the authority to impose cybersecurity regulations on the cryptocurrency industry, where hacks have occurred with relative frequency. Can you give us the state of cybersecurity at CFTC itself and at the companies that you oversee, including the cryptocurrency world?
Thank you for that. And I'm actually glad you drew a distinction between the CFTC itself and the companies we oversee. So, as I mentioned before, the CFTC recently had its audit, its annual audit, as do all federal agencies, and we ranked ahead of many of our fellow agencies. I'm very pleased with the results there. They found no.
Is that a good thing?
Well, let's hope it is. You know, when it comes to cyber, you can never say it will never happen to you. You have to assume it will happen at some point, and so which is why I've put in a number of reforms since I've become chairman. I meet monthly with our head of cyber. He reviews all of the cyber activities during the month. We receive almost 9,000 attempts a month, so it is the attacks are relentless. We are also looking at human error, so we are upping our game in terms of doing internal testing of what's called phishing exercises. I feel we're doing a lot of good things at the CFTC. I wish I had as good of a feeling, and I'll be very candid with you, of our ability to monitor what's going on in the ecosystem, in the markets we oversee. Right now, we should have 4 cybersecurity examiners for the players in our market. Through attrition, we're down to 1. And in our budget is the resources to fill those gaps, but we desperately need to do that, because I would much rather that our examiner goes into an exchange or to a clearinghouse and says, there's a gap in your cyber defenses, and they fix it. I'd much rather that than to get a phone call the next day or some other time saying that they've been hacked, and now we've got some problems in the marketplace. So a pound of prevention is worth, whatever it is, an ounce of prevention is worth a pound of cure. I'd like to make sure we've got that ounce and fill those three missing players.
Are you going to be able to find the resources to do that, not including that $31.5 million?
I said in my opening, give us the tools, we'll do the job. Give us the tools, we'll do the job. We'll fill them. I'm a persuasive recruiter.
Mr. Young.
Thank you, Mr. Chairman. Mr. Chairman, speed, technology, algorithms, artificial intelligence. I've got concerns based on the concerns of farmers and producers back home, asking about the ability of the CFTC to effectively provide oversight for our farmers and producers with all this happening, particularly the balance between fundamental market users versus the algorithmic trader. Do we have balance? How do you get it? Do we need it?
That's a great question. When I meet with farmers, travel around the country, the question that seems to be the common question is, what's going on in these markets? When I go in the market, am I getting run over by a speeding train of algorithmic traders? What is the role they play in the market? What's the balance between them and us, the natural hedgers? And it's not an easy question to answer. There's a lot of anecdotal stories, but that doesn't prove anything. And this is why we're seeking to really redouble our economist unit. We want answers to these questions, and we want good, solid, data-driven answers, not answers that are driven by a story or an experience in the marketplace. Healthy markets are like environments in the natural world. The healthiest ones, the most durable ones, are the ones that have the most biodiversity. And the same thing is true about economic markets. If you couldn't have a market if you just had naturals, because everybody would be long. There'd be nobody to go short. You need the balance. But balance is the operative word. What is the right balance? And our markets are changing so dramatically. So what's a responsible agency to do? It's to first to understand these changes and then decide what are the right policy responses. The one thing I won't do is, based on some anecdote, go in and start setting restrictions on who can be in the market and who can't, because they may be the very valuable liquidity providers the market needs. What we need to do is really understand the role of these algorithmic traders and the proprietary traders that are not natural. They're not naturally long. They're just taking the other side of a trade all day long. They can be long or short. And so we need to understand that dynamic, which is why we're asking additional resources for the Office of Chief Economist.
As you've witnessed the rise of algorithmic trading, have you seen a rise in volatility? Can you measure that somewhere? Can you pinpoint it? Is it there? Is it match up?
It's not an exact correlation.
Okay, it's not a correlation. Yeah. How do you manage volatility?
Well, that
should you?
Yeah, in many ways, that's what these products do. The more volatile market. In fact, somebody mentioned Bitcoin. In fact, what's interesting is the impact that the Bitcoin futures has had on the underlying price. The day the Bitcoin futures launched on CME was the high watermark of the Bitcoin price, and since then, it seems to be stabilizing around 10,000. So the launch of the future, a healthy futures market, often brings a stability to underlying markets.
Can you measure during a trading day which are algorithmic? How many are algorithmic trading from computers, and how many are the true market makers?
Yeah. So,
Is it 10 to 1? Is it 50-50? Is it?
you know, again, it's different in virtually every marketplace. Some markets, financials tend to be more dominated than commodity and natural and softs markets. But yet, the markets we live in today are majority automated and increasingly algorithmic. I mean, the day of the manual trading is passing with the day of the trading floor. And we have to accept that markets are becoming digital in the same way the rest of our worlds are becoming digital, and they're becoming increasingly automated, increasingly algorithmic. That is the world that we are heading toward, and that's why as an agency, we need to be up to that challenge. We need to be as digital as these markets.
Reminds me of a line from a Pink Floyd song, "Welcome to the Machine." I yield.
Thank you, Mr. Chairman. Chairman Giancarlo, you convened a meeting of the CFTC on February 28th. It was with the SEC Chairman Clayton, SEC Commissioner Pierce, CFTC Commissioner Quintez, and the staff from both CFTC and the SEC. This is a tweet from your February 27th gathering at 9:18 p.m., and it reads, "Earlier today at CFTC, staff at CFTC Quintez and I hosted Chairman Clayton and SEC colleagues to discuss better harmonizing Dodd-Frank regs and rules. We're off to a great start." This was not a public meeting, but one that was behind closed doors and one among only Republican members of both commissions, as I understand it. It's troubling, but even more troubling than the partisanship of the meeting is the fact that the meeting appeared to potentially violate the Government and Sunshine Act. And you know that act, it may require that for the CFTC in its current form, you've got 2 of 3 members of the CFTC meeting, that it must be open to the public unless an exemption applies. So that it appears to me, based on your tweet and discussing better harmonization of Dodd-Frank regulations and rules involved, the rules involve policy discussions that, to my mind, should have been open to the public. So let me run down just a few questions for which I was just looking for a yes or no answer. Did the information shared during the meeting relate to national defense?
No.
Was the meeting related solely to internal personnel rules and practices?
The meeting was a briefing by staffs of the 2 agencies on progress that had or had not been made in the statutorily required harmonization of Dodd-Frank rules between the 2 agencies.
Did the meeting have any discussion of the current state of looking at what's going on with the unraveling of the Dodd-Frank regulations?
No.
Was the meeting related to accusing a person of a crime?
No.
Was the meeting related to information where disclosure would constitute a breach of privacy?
No.
Was the meeting related to investigatory records where the information would harm the proceedings?
Can I say what the meeting was? The meeting was a briefing by staffs that had worked on harmonization efforts as statutorily required. And the meeting was overseen by the Office of General Counsel to make sure that it did not breach the what is called regulation in the Sunshine Act.
Was the meeting related to information which would lead to financial speculation or endanger the stability of any financial institution?
The meeting did not concern any particular financial institution.
Was the meeting related to the agency's participation in legal proceedings?
I'm almost uncomfortable with calling it a meeting. It was a briefing, and no legal proceedings were discussed.
why then was the meeting not open to the public when that is something that is required? And you are talking about, as you said, the harmonization of Dodd-Frank and making it such a partisan effort.
Well, so it's not a partisan effort, first of all, because any rulemaking that would come out of this would have to go through the Administrative Procedures Act, would be briefed. My fellow Democrat in the commission was briefed on all the issues discussed at the meeting in advance of the meeting. The harmonization effort are chairman-led efforts at both the SEC and the CFTC. So Chairman Massid never involved me in any harmonization efforts.
I'm talking about, and I would have the same question of Chairman Massid.
Of course, but it's a chairman-led effort, and the staff was briefing us on progress that had been made, so we could get up to speed of where things were left when our predecessors left the agencies, and to see what needs to do going forward.
But I don't know what your general counsel said, but as I understand the Sunshine Act requires that CFTC, when 2 of the 3 members of the CFTC meet, it must be open to the public unless an exemption applies. So I just think
and we were assured that an exemption applied for briefings. In fact, meetings take place routinely at the agency where staff brief commissioners, and those meetings are closed to the public.
What was the nature of the exemption?
It was non-deliberation of commission matters. It was a briefing only. It was a one-way information flow.
Well, thank you for the clarification, but I just think that when we're talking about these are critical issues these days, that it would be good to have the transparency that we have so lacked in the past with regard to so many of these critically important areas. Thank you.
Thank you, Ms. Laurel. Mr. Chairman, thank you for being here. I think we have a good hearing today, and to discuss some of these issues and bring up some issues that the members of this subcommittee feel is important. Thank you for sharing and bringing us up to date, and we look forward as we continue on with the FY19 appropriation bill and that affects your agency, and so we look forward to working with you, and thank you for your service, and the hearing is adjourned.